Wednesday, February 5th. Market analysis, Stan Ehrlich. You guys know I start out with the stock indexes, Spider, E-mini, NASDAQ, Qs, YM, Russell 2000, and then I go to futures, which would be interest rates and energies, grains, meats, metals. Um, so here we go. We have a little rally today. At the moment, it's not very much. And it managed, and it still is, slightly above yesterday's highs. Now remember, on Monday, the E-mini on this daily data chart broke down below the lows of the previous 2 weeks, approximately, and then popped back fairly decently, came up some more yesterday, not a lot, but a medium-sized rally, and today, at the moment, up about a point. So that's not a lot, but it is a little bit above yesterday's high. That allows for a bearish engulfing if it can sink below yesterday's low, which it has not done. It'll have to make a new low for the session and a new low lower than yesterday's low, which would generate probably a new low close for the move down in the last several days this week, and probably start it to challenge the lowest lows for the last 2.5 or so weeks. So let's look at the 1-minute data. Okay. We're still fairly strong. We're still near the high that we just made a little while ago, literally about an hour ago. And it is just a little bit above the high of the previous session, which was on the opening and matched, I think, to the tick near the close of yesterday. So the high was made twice, about the same price, give or take a tick or two. I don't see this as being anything that I need to be worried about because I am expecting lower levels in the next several days and next maybe even a few weeks. Depends upon whether this toppy formation can top out or not. The next one is a spider daily data chart, a little higher than yesterday's high, still approaching the major resistance area where it topped out now for a possible double top. Remember, you have to go all the way down to 575 or 576 and close below that low on January 13th in order to have a downside breakout. Then you get a move down all the way to 542 as far as the chart formations would indicate. Plus, the spider has not yet closed a gap down here. It should get down to 585 just to close an old gap. It tried to do it on Monday and couldn't quite do the job at all, and so we're bouncing a little. It's not like it was oversold. It wasn't. And only the Russell barely touched oversold, I believe it was on Monday. All right, let's go to the 1 minute. Bouncing some. Can't come to any super profound commentary about the spider 1 minute data. It's just a little bit of a bounce at the moment. QQQ, same story, slightly higher than the previous day, a little bit higher on the week, Monday to Wednesday, halfway through the day. And we could flip-flop and end up with a bearish engulfing. Now, none of these are going to have a red bearish sell signal, but a bearish engulfing would be something I would like to see, but it hasn't happened. We still have the possibility of a head and shoulder top. It's just looking like it could develop. It has been developing, but it's not finished. So, don't get too excited about the move down to 460, which would be the downside objective if we can start closing below, let's call it 501. And we're at 525 right now. So that's a pretty decent break to begin with, just in order to break out. And it can't go up much more because then it starts to ruin this pattern. You can't go sideways. You can't rally much. We should be finishing this process of rounding out the top, which is the last shoulder high. Our first shoulder, we had a bearish engulfing on the high day. The head of the formation is overbought condition. The last shoulder we seem to have made, which would have been January 22, 23, 24. That's a challenge, but it's okay. Dip, another sort of, it's not, we're right smack dab at where the market has had some trouble before. 4 days ago, a week before that, a week before that, a week before that, and a couple of weeks before that, right around the same price level. So it would not surprise me if we did start to slip from here. Next chart is simply the 1 minute QQQ. Yeah, yeah. There's that 4 days ago high, and I can't see the other ones unless I change the time frame, but that's okay. Next, we got the NASDAQ. Should be the same approximately situation as the Qs. Now we do have that. We have the formation, we have the neckline, we've got everything set. All we have to do is start heading south. And at the moment, it's just about at yesterday's high, having made a minor new high. They're all very similar here. Next, NASDAQ 1 minute chart. Is it topping out right now? I think it's a little early to say. I really can't be convinced of that. Okay. YM had a bearish engulfing on Friday, January 31st, dropped like a rock on Monday, which no surprise, although it was fairly sizable. I didn't expect it to be that big. Came back some yesterday and a little bit more today, just barely getting above 826 last three numbers, 845. Yeah, just barely above yesterday's high, like the other indexes. And it's kind of sitting around there right now. 1 minute chart. Yep, having a little trouble for the last, about an hour and 15 minutes. Tried to make new highs again twice. Maybe it will, maybe it won't. But this could be a perfect spot for it to roll over and start to slide down. Next, Russell, different animal. Up into resistance area again. A minor resistance area inside the big one. Stopped it several times in the last 3 weeks. If it gets there again, I wouldn't be surprised to see it stop again. If it closes above the little minor resistance zone, then you could probably have another shot up until you get overbought again. But I don't think that's going to happen. I think it's going to stall out and then start to drop and challenge these lows down here. What about the Russell 1 minute? It's not too much help. Like the other indexes that topped out a little while ago. And right now you can see it's almost making a new low for about an hour. Yeah, it made a new low just now for about an hour, but it's still higher on the day. Okay, bonds, love it. Ladies and gentlemen, we have a buy signal on the bottom of the market to the exact day on January 14th. ER1 got long, made some money. ER1 scalp did well also. Now, I'm showing you ER3 position trade and ER3 scalp trade, which bought below the bid, which was in on the opening, and got filled at 110.30, the low tick on the opening of this January 15th. We bought the low of the day. It was the retracement for ER3, totally planned in advance. We got a little lucky that we got the exact low, but the point is it went down to our buy point, and it's a strategy. It's 100% algorithm, automated, period. We are still long from 110.30, call it 111, and we are 116.03, up 43 today. Now, clearly new high ground, more likely than not going to stay up here, probably, not guaranteed. And our trade is just great at this point. The entry was dead perfect. You could not get better on that particular day. We bought the low of the day, and it's 1 day after the bottom day. And we're high and last for the whole move up at the moment, give or take a few ticks. And our minimum upside objective is 117.5. We are a 1.5 points away. This is turning out to be a great trade. Our trailing stop is going to start to rally more because we have new highs. Next chart. Now the 10-year notes finally are cooperating. We had a tease of a breakout on January 27th. It didn't close strong enough to be closing above the neckline, obviously. Right on it, it looks like. Came down a few ticks the next day. No breakout yet. Came down again a couple of ticks the next day. Still no breakout on a closing basis. But January 30th, we closed clearly, not much, but clearly above the neckline. That should have been a bullish breakout, except it wasn't very big rally, not a lot of oomph, pop, bang to it, and so on. And it fell right back down again below the neckline the next day. So that really didn't hold enough follow through. And then Monday, up a tiny bit. Tuesday, yesterday, closing again slightly above the neckline. And today, this is it. So I really should take this little measuring stick and put it over to today, but it's not going to change anything. The neckline is almost dead flat. So it's the same. Upside objective, give or take a different couple of ticks, is still about 111 and a half, or a little below that. Yeah, right around 111 and a half. And today's the breakout day. Period, explanation point, underline, italicized, et cetera, et cetera, et cetera. New highs, big up day, 100% of the range is equal to or higher than the neckline. I like it. Classic breakout today. It just screwed around for 6 days, which was frustrating. Today's the day. We're on our way, supposedly, to 111.16. No guarantees, of course. Next, crude. Almost a new low, a big down day, challenging previous lows. Like I said before, we're not oversold but close, and we could dip into this pennant formation a little bit more, which is exactly what I think it's in the process of doing. I'm not really bearish. I'm just kind of looking for a buy signal here in the next few days. Hopefully it's going to get oversold since it's so close and make minor new lows. And then we're going to set up for some sort of a buy. Next, kind of the same story in the heating oil. Support's a little bit better in heating oil, hanging in there a little better. No new low close at the moment. No new low either at the moment. Not quite as close as crude. And it's nowhere near oversold. So it could come down to this support area without too much hassle, too much trouble. So I guess I'm looking for 2.3 to 2.2-ish. Next, natural gas, a tick or two of a new low, lower than yesterday's low, trying to finish closing this gap. The bigger picture, though, is the head and shoulder top. The rally high on Monday, as I said on Monday, was just dead perfect, right up against the neckline. Classic textbook retracement. The breakout is classic. I still believe this is going to go down to 2.404 or lower. Maybe take a few weeks, 2 to 4. And that's it. The only thing we should not be doing is closing above this neckline, period. And I don't even want to go back up to the neckline again. One time is the normal, usual retracement to the neckline. It did it just perfectly. Down yesterday and just a little bit higher today. That's okay, no big deal. Close the gap and don't stop. Keep on going down. Next, gold, silver, platinum, then copper. Still overbought. Looking good. I like what I see. I'm bullish, but overbought to me means you're likely to have some sort of a downside correction, which obviously hasn't started yet. I've got an upside objective of either 29.87 or up to about 31.17. And the shorter objective is because of the vertical height of the back of the pennant formation. The larger upside objective is from the top of the pennant to the bottom of the staff that started the move up to the pennant. And I chose this low there. You might have chosen that one. You'll have a little bit higher objective. not that important at this time. Well, I'm looking for a correction, then up. Next, silver. Almost overbought. Wow, we are so close. RSI got up to 74.89. About as close as you can get. So it's not quite overbought. Barely a new high from yesterday at a resistance level. I think it's going to try to turn down any minute, just like gold. Platinum. We have a bearish engulfing on Monday, and I've zoomed into just the last couple, 3 weeks. We got into a resistance area. The ER3 new short sell signal was going to be going short at 1021.6. We did it. We're currently trading at 1023.9, small loss. Stop is in place. We're short ER3 overnight and an ER3 scalp with a small loss on both momentarily. If you are interested, I would not be objecting to new short sales at a little higher than where I went short, but you still got to use your stops, of course, to protect yourself from any large loss. I like what I see. I think it's going to turn around and start to slide. Next, high-grade copper. Big update today, challenging previous highs, getting up to a resistance area. But the problem is it's 73.5 on the RSI, and the high RSI for the day has been 74.59. So it's awfully close to 75 or higher. And we just barely touched the resistance area. I think this could be a rally high or just a little bit higher in the next day or two. So we should be very close to it to turn back down some. The bigger picture is this massive support area going back to August, and once, twice, basically 3, 4, 5, 6 times or so, sometimes one day, sometimes a few days, it's bottomed out in this 4.1 and a little bit lower support zone. High, resistance, bearish engulfing, sell signal, dip for a couple of weeks, perfect. Now, are we on the way to new highs totally? If we do make minor new highs for a couple of 3 months since November, I don't think it's going to go that much higher that quickly because it's going to get overbought in a resistance area. But new highs are possible. And then one other correction and then up again. I'm bullish, but we're too close to resistance and overbought to be putting on new long positions at this price. Next, soybeans, corn, soybean, oil, meal, corn, wheat, and then cattle, hogs, and a stock. So, minor new high this morning in soybeans came within a less than 2 cents of making a new high since August, actually late July. That would be, and it didn't do it yet, it needed a couple of more pennies, so it stopped at historical resistance, that's the yellow line, and flipped. So I don't think it's going to go down too much. It wasn't overbought. It might challenge the low of Monday. It may not even come down that far. And I think very soon, a few days, a week, maybe a hair more, we're going to be above 1082, I think, and be breaking out of a double bottom formation from August to mid-December, and therefore start another leg up to 1185. On top of that, we have already broken a major bear trend line classically, running through it, retracing back to the line, making a new high, and a low higher than the previous low, and now a high higher than the previous high. But again, a minor level of previous rally high resistance numbers has stopped it for the moment. I'm bullish. I think we have a long-term bottom building or has been built in grain in general. Let's look at soybean oil. Okay, it's backing up a little bit today. It already on Monday got overbought, bumped against resistance, so I'm not surprised. Like I said, I'm sure I said on Monday that we could have a little dip here, and that's exactly what it's doing. I don't think it's going to go below 44.13, but that wouldn't kill anything. It's just going back into support. So somewhere around 44.11 to maybe a little lower, 43.30-ish maybe. I expect it to turn around and start to move back up again to make new highs. This is a head and shoulder bottom with a slightly upward slanted neckline that started being built way back in May. First shoulder. Head, August 16th. Last shoulder low with a bullish engulfing involved in it is December. Now we are already not too far from the neckline. If we start closing above 50.75, we should get up to 61.50-ish because of the neckline, head and shoulder pattern. I overall like what I see. It's a little lopsided, but they're not perfect. What can I say? A little bit more of a dip maybe, but I'm bullish. Looking for support to hold, looking for a turn back up. Next, soybean meal, a little bit of a dip. Between a rock and a hard spot at the moment. Broad potential triple bottom. Now, triple bottoms are fairly rare, but they happen. And this one looks like it could very well happen. Now, we won't be certain about the triple bottom until we start closing way up here at 363-ish. Then we're looking at a crossover of a major bear trend line having happened and pretty much in the clear to go maybe way up to 413 like it did October of 23. Yep, October of 23. November 16th. Sorry, November 15th. So I'm bullish. I'm just looking for support to hold again. Maybe I'm going to get a buy signal out of it, I hope. Next, corn. It's already had a head and shoulder bottom. It already broke the neckline on a closing basis, but we had a false breakout for a day or two. Slipped back, held, legitimate, past tense. Breakout, basically you could say December 26th, day after Christmas. False sell signal, didn't work. Held above the neckline for the pattern, that's good. Boom, into new high ground, January 10th. Overbought, up, and finally a bear. Well, that's not even a bearish engulfing. It's just an engulfing. It was a bass backwards. And then we had a minor correction, another new high. And by the way, that rally high, January 23, reached our minimum upside objective almost exactly from the head and shoulder bottom. So that pattern's done. We made higher highs. Remember, these are always minimum objectives. Sometimes they go twice as far, 3 times as far as they're supposed to. This time so far, all we've gone is a little bit further than the objective, but I'm still bullish. I don't see any top here. We're not even close to overbought. We're making minor new highs again. I have no reason to believe we're going to start breaking below 472. And if that happens, we might come back down to 457. But I think it's going to hang in here above probably 480, and we're 91. So the next dime down, and then make new highs. Wheat, little bit of retracement, new highs. This double bottom formation won't break out to the upside until we start closing above 636. Then you're going to get an upside objective of 738. So we need, on any minor correction, to hang in there. No major new lows. A dip down to, at the most, I think 540, 545, 550, and then up if we see a little bit more weakness. Okay, cattle. Rally today. Monday, we had a bearish engulfing sell signal. Tuesday, we made new lows, coming down really great. So today, we went up and got back to the middle of the range approximately. It's a mathematical formula. It's not exactly the middle of the signal day. Monday's bearish engulfing ER sell signal day. Got short, and we're there right now at or a tick above our new short sale. If you want to go short cattle, I wouldn't complain. Keep your appropriate tight stop in. Don't lose too much if the trade doesn't work. If it does work, we're selling almost a rally high for today. I think, I expect, I hope, and it'll make new lows in the next few days. Okay, this is that hog chart. Supports holding for the third time Monday, Tuesday's rally, today's rally on Wednesday. I really don't want any higher highs, but what's the deal here? We have an uptrend since last summer. We've had a fairly substantial correction, new lows for a couple of months. And that bottomed out beginning of January, about a month ago. Started to make a high, then a higher low, then a higher high, got a little overbought. Now we've got another higher low, and we're trying to make another third higher high since a significant oversold condition, again, January 8th, in a major support area. This could continue. I can't rule out a longer term bull move, but you have to watch these resistance areas on the way up to see if it causes any major reversals or even major sell signals and develop any major top formations. So this is a little bit difficult to call. I think I have to favor being on the long side of pork here. I probably wasn't saying that at all on Monday because it looked bad and it wasn't oversold yet, but it didn't follow through. Now, we might not follow through on the way up either. I just don't know. Now, the stock, I've added some markings here. This could be a shoulder low, December 20, and an inside shoulder, we call it December 31. That's a double shoulder. Note the lows and the price levels there and there. Head of the formation, bottom of support, got almost oversold, rallied. Inside low, almost the same price as the other inside low. Darn good. Timing maybe a day or two a little late, but pretty good. Rallied up to the previous rally high, and that was the pivot point for the neckline. So now you establish a slightly upward slanting maybe neckline. And now we come down to the last shoulder low. Yesterday and today, the lows are almost the same. We're right there right now at support, not oversold. Last shoulders don't usually get oversold anyway, normal. So I wouldn't be a damn bit surprised if this thing started to turn up from right here, right now. If it goes a little bit lower, that's modestly acceptable. What I don't want is for it to go below 84. That would throw off the shoulder symmetry. It wouldn't kill the pattern completely, but it sure as heck would make it a lot more difficult to stay bullish and call it a head and shoulder. Right now, it looks awful damn good. It's just we don't have the rally. Let's see what happens. Back to the E-mini. Not much is happening. Just up 8, which is 80 cents on the SPY. And yep, we've got no new high. We had a little tiny lower low a few minutes ago, and it's just kind of flirting around here, not doing too much. You guys have a great day and profitable trading to you.